We are continuing our coverage from the Toronto Investment Conference, and joining me is one of the speakers, Danielle Park. Danielle, nice to be with you again.
Hi, thank you.
Danielle, a question I get asked often, and I believe you mentioned this in your presentation today, is about the current banking situation in Europe. Are they headed for the same fate as the U.S. banks had?
Yeah, I think they're talking about the TALF program, TALF-like program right now to try and bail out the banks some more. I think they'll probably do that for a while longer just because they have no separation agreement. None was really contemplated when the euro came together in the way that it did. And so now when you have certain members failing, there's no out clause, there's no mechanism to extract them without a lot of disruption. And so you keep seeing people trying to step in with more liquidity. But, you know, as I was telling people in my talk today, really this is like the banking crisis of '08 replaying again in a different geographical zone, because the hub of the last crisis in '08 was really the subprime mortgage market in the United States, and the contagion spread, of course, and this time the credit crisis is both another downturn in housing, which is happening in the United States, but also this trying to pretend and extend the bad bonds in the Eurozone. And then you have this integration where U.S. money market funds have bought a whole bunch of Eurozone debt paper in the last few years in trying to find increased yield. And so the contagion effects are large and looming.
So how does this translate for gold? How come this should be a very bullish scenario for gold, but yet we haven't seen it hit that $2,000 mark yet? Why not?
I don't know why not. You might indeed see it. You may also see, though, in a next phase of risk aversion that people were surprised in 2008 when gold sold off, when gold shares all took a hit, when the paper trading versions of gold and other precious metals traded down with the market. I think you could see that again because you get this liquidity crunch where everyone is desperate for paying off debt, paying off margin as asset prices fall. Hedge funds start to get into difficulty. We've seen that year to date. Many of them had big losses. UBS's story recently with the $2 billion rogue trader, those stories really come to the fore. And then that causes this cascade of selling, which you can see across all of these asset classes because they tend to be highly correlated in these conditions. So, I think people have to always be careful about long-term thesis is fine, but your short-term risk management strategy must be very focused on what's actually happening in the next month, 6 months, 12 months.
And what would you tell investors when we see these $100 corrections in gold? Is it a panic mode or just ride it out?
I don't really have any advice about that because it's a very volatile sector and it depends on what the person's trying to accomplish by holding it and how much of their net worth is in it. But you've had this enormous move up from $750 where it retested in '08 to $1,800. So if you are surprised by a $100 drop, you don't really understand that you're on this beast that could have that kind of swing. Easily it could fall back to even $800 and still be in this secular uptrend. So, you must include all these possibilities in your understanding of what you're holding and why and for what time horizon.
So what's your long-term forecast for gold, Danielle?
For gold, I honestly don't have one. It's not an investment thesis. I think that if you get to the 2012 election cycle in the United States and the Republicans are talking about serious fiscal discipline and cuts and perhaps Bernanke doesn't get reelected, you could see that the trend towards austerity actually bursts the whole appetite for gold. And I'm expecting that will happen. I just can't tell you exactly when. But it'll happen when everyone's least expecting it. You can be pretty sure of that.
Do you think Obama's job plan will bring optimism? Is this a step forward in the right direction?
No, I think it was a desperate late move, sadly. Mr. Obama's lacked leadership. That's been sad to watch. I think he was trying to roll out something, just anything, so they won't accuse him of not having a plan. But when you look at the stimulative impact, it really isn't going to be that significant. And I think we are already into a rising unemployment, rising layoff period again, and that will be increased as we go into another recession, which I actually think we are about to or presently starting, and that will go on probably for another year or so, in which unemployment will get greater coming into the 2012 election, which may be a major hurdle for Mr. Obama and his government.
All right, Danielle, final thoughts for investors.
I think, as I was trying to say in my presentation, cyclical downturns within these periods can be extreme, can be very vicious. You want to make sure that you don't just ride the puppy right down. You want to have some liquidity and be ready for another buying opportunity, perhaps like we saw in March of '09.
All right, Danielle, thank you so much.
Thank you.
And thank you for watching. Stay tuned to Kitco.com. For more interviews from the show, you can email me your comments and questions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone, Toronto.